What's up, everybody? It is Thursday, August 7th. So, kind of a weird trading day today. You know, I don't usually like to assign meaning to every single day, even though I kind of do that for you guys just as a courtesy. But a lot of times, market movements, daily market movements, really is just kind of noise. You know, you could have situations where some big player might be adjusting a position or whatever. Headlines we see often. But today we started out strong and then the Dow headed straight down. And the markets came under some selling pressure, but NASDAQ ended up. Dow recovered some of its losses. I think S&P was down a little bit, fractionally, percentage-wise. Then I realized, because I was trying to see if there was anything in particular that was maybe driving this. You know, we had a couple of what I think were really nonsensical explanations that I saw posted online. I mean, one was that Trump selected some new guy, or Trump has already the new guy in mind for the Fed, Christopher Waller, who's on the FOMC, and you know he was one of the dissenters in the last meeting. You know, that's a ridiculous explanation. And the other, there was some other, you know, kind of kooky explanation too. I don't remember what it was off the top of my head. Oh yeah, there was I think a T-bill auction today or something like that, and it was a little bit high, or you know, just like, it's silly, man. It's silly. But then I realized, after I was thinking about it for a while, I said, oh yeah, I know what happened. I know what's happening this week. I mean, we're not getting our usual midweek Wednesday Social Security payment. I mean, we get those 4 times a month. They come on Wednesdays, and then there's a couple of days every other month with a supplemental. Supplementals are small, but the main ones are, you know, every Wednesday of the month. And those are big, positive net flow days. And this month, because of a calendar issue, it's not like they're not sending it out. It's going out next week. So this week, we didn't have the usual strong midweek flow. And so the market was definitely susceptible to some selling, you know, profit taking, whatever you want to call it. It's just, you know, I call it selling, obviously. You know, it's a little soft, probably on the buy side, on the demand side. And that's because you could see the correlation between these flows. I mean, again, this is the core of my analysis, is looking at these flows. And it makes total sense to me. So no big deal, nothing to worry about. Actually, this morning when I looked at the weekly AAII sentiment survey, bearish sentiment, I believe, if I remember correctly, bearish sentiment rose to the highest level in 6 months or something like that, maybe even longer than that. So if you recall, a couple of weeks ago, I said, looking at that survey back then, you know, 2 weeks ago, I said that bullish sentiment had gotten elevated and bearish sentiment was very low. And I said, that's probably the recipe for a short-term correction. And we did have that correction. The market pulled back a little bit. We had that day, what was it, 500 down? What was that, on Friday or something like that? And now it's the opposite. Like, they're really, really bearish, individual investors. So I think market psychology right now is definitely supportive of a continuation of this rally after we get through this week, because again, we didn't have this normal Social Security payment this week, and that's a factor. You know, I'm not gonna lie, that is a factor. These weekly large transfers from Social Security payments, they just add to the balances in the system, and that tends to have an effect on asset prices. And we didn't get that this week. But again, next week we got the double. We got Social Security on Wednesday, and we have the quarterly interest payment on Friday. Now, I've been saying that I think next week will mark the peak in the flows for this cycle. This cycle meaning the quarter ending next Friday, because that will culminate with that large interest transfer. And then we got to see. Then I would think that depending on market psychology at that point, it would be susceptible to another pullback. But I want to see what market psychology is going to look like. Look, we've never gotten really, really bullish. When we had that correction in April, May, and then again in June, that wiped out like all the bullish sentiment that had been in place since like 2023. I mean, we had a string, I don't remember exactly off the top of my head, but if you look at the bull-bear spread in that weekly AAII sentiment survey, that bull-bear spread, in other words, you take the bullish reading minus the bearish reading, that was positive for something like, I don't remember how many weeks, but it was like 66 or 67 or 68 consecutive weeks in a row. That was, I believe that was the longest streak, if I remember correctly, since 2004. So at that time, it was the longest streak. When we ended it early this year, that was like the longest streak in over 20 years. And since then, we have not seen a recovery in that bullish sentiment to very high levels. It's been kind of tepid. It's been back and forth between bull and bear, like not really extreme on either side. So we potentially could get into an environment here where bullish sentiment becomes very elevated again. But that's going to depend on the flows, and that's going to depend on all the things I've been talking about, namely the impact of the tariffs, how much of a fiscal drag that's going to apply, the impact of the end of salary payments to government workers who resigned when they took that Doge offer, what was it, back in February or March. And it's going to depend on the big, beautiful bill, the tax cuts in there, the spending cuts, and how that all plays out. So, I mean, I've been repeating this on the videos that I've been making, saying that I don't have the numbers yet. But market sentiment, from what I see, is basically really in a kind of a neutral zone where we could definitely see if conditions are right, if monetary conditions are right. And don't forget, we're going to get a Fed rate cut. You know, I look at that differently than the way everybody else looks at it. A rate cut to me means a reduction in interest income transfers. So over time, that's not adding to the balances of the economy. That's actually removing the balances. But the initial reaction to a rate cut will be bullish for financial assets because you have that impact of higher future cash flows. So financial analysts, they use that formula. I've said in the past that I think that formula is flawed. I think there's some incorrect or left out assumptions in that formula, namely transfers, but I'm not going to get into that now. But the initial impact on rate cuts to financial assets, risk assets, that's going to be positive. And that's happening in September. Unless something changes right now. If you look right now, I look today, the probability based on where Fed fund futures are trading, that's right now, I think, at about a 94% probability of a rate cut in September. Bank of England cut rates today. So the pressure is on the Fed. Trump nominated this guy, who is the chairman or the head of the Economic Council at the White House, he's going to be on the FOMC because we had one of the members resign. So he's temporary until Trump finds a replacement. But, you know, that's going to be another guy who's going to dissent, obviously, because he's Trump's pick. So I think conditions are coming together, at least in terms of the monetary condition, market psychology, a Fed rate cut coming up in September. When we get to the end of September into October, that's when I think we're really going to start to see the impact of the tariffs and the impact of the BBB and the Doge cuts. Right now, we're not seeing those numbers. Right now, the numbers are very supportive. Even though we have seen an increase in tariff drag, and by the way, the increase in tariff drag, fiscal drag, has become the fastest component of fiscal drag. It is exceeding the fiscal drag, the increase in fiscal drag from individual tax payments. So tariffs are significant. I'm not going to say they're not. It's an important element of fiscal drag, the most important element of fiscal drag right now, the most important component of fiscal drag right now. So I'm not discounting that. I'm paying attention to that. I'm watching that. As soon as I see an uptick, I said yesterday that it's running at about 400 million, 425 million a day. And then we get, you know, every third Thursday in the month, we get that big one of 20 billion. So it's running at about 30 billion a month right now. That's a lot. That's 360 billion a year of transfers to the government from the economy. Reduction in balances, 360 billion, just as it stands right now, without these new tariffs hitting. So it's very important to keep track of this, which I'm doing. Anyway, again, not much to talk about today. This week was impacted by the lack of the Social Security payment. It made demand a little bit softer than it otherwise would have been. No big deal. Again, next week is going to be a huge flows week, and it's going to be positive. And market psychology right now, I think, is supportive for higher market averages. I did a little bit of buying today. I bought some United Health on the dip near the lows. And yeah, that's about it. Anyway, that's it for today, folks. Please like and subscribe. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.